Stocks drift down after opening up with a big gap on hopes of trade negotiations tempering tariffs. Consumer durables, healthcare and realty have bounced up, but metals and utilities are the big drags. The indices are trying to recover from the lows.
Titan turns in a healthy growth in the gold jewelry segment in fourth quarter, riding on higher gold prices, but sales of studded ornaments lag. Other segments like watches, eye care and fragrances too grow well. The stock higher.
Bharat Electronics has bagged a hefty 2,200 crore rupee order for electronic warfare suits from the Indian Air Force, swelling its order wins in the early days of FY26 to nearly 3,000 crore rupees. The stock perks up.
Oil marketing companies gaining from a sharp drop in crude prices will pay an additional duty of 2 rupees per litre on petrol and diesel, even as they get to charge more for LPG. Funds from the fuel levy are expected to be used to pay for oil marketers' LPG losses.
US President Donald Trump threatens to levy an additional tariff of 50% on Chinese goods if the Asian giant does not roll back its 34% counter levy before the 9th of April. China proposes dialogue and warns it will fight to the end if the tariffs are levied.
Well, it's not just a tariff war, it is also a war for commentary, it's a war for supremacy, it's a war for headlines. That's exactly what's taking place in the global world right now. You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. Yesterday was a big gash that we saw on our indices. Today is a mild recovery from those levels itself. Maybe the street is now coming to terms with what's taken place over the weekend after a big cut that we saw across the global markets in our own markets. The good part today, though, is portfolios might be feeling a little better than what we saw yesterday. And that's largely because the mid-cap index is doing a lot better. 2,100 stocks in the green. From yesterday's low to now, there has been a recovery of nearly 600 to 650 points on the frontline index. That's the Nifty Bank leading charge as well ahead of important events like the RBI policy outcome tomorrow. Hi, Horma.
Hi, Mangalam. Some very important days lie up ahead, as you just mentioned. The RBI policy tomorrow, the day of the reciprocal tariffs also kicking in on the 10th, which is Thursday, which is a market holiday for us. But it is a very important day because also TCS will be reporting results that day, starting the earnings season for the Nifty 50 constituents. Of course, as Mangalam just mentioned, the broader market's doing very well for themselves. There are some enough and more stocks that are in the green, 2,100 of them to be precise, and 5-star business finance is leading the pack here, 8.5% higher on the Nifty 500. The top gainer there, Vijaya Diagnostics, is the other one, 8.25% higher there as well. And some of these consumer durable names, or the electronic component manufacturers, if I can call it that, the likes of Keynes Technologies, PG, Electroplast, all of them seeing gains of anywhere between 6 to 7% in today's trading session. Speaking of a Tata Group name, as you mentioned, TCS, but Titan is the one that's in focus today. That's doing well after it reported its fourth quarter business update. And Mangalam, it looks to be a good number.
Looks to be a good number, but there are a lot of internals out there which we need to watch out for. Why is it that the street is reacting so positively to these numbers? Because one, Titan's base is fairly high, and on top of that, a 25% growth is something that the street is reacting to favorably. Remember, the stock had actually hit a fresh 52-week low in yesterday's trading session. So from oversold levels as well, it is moving higher. If you look at the details, X of jewelry, the other businesses have done extremely well. Watches up 22% in revenue, eye care up 19%. But it is the jewelry business which was actually led by higher gold prices. The company itself said that, gold jewelry saw 27% revenue growth. In fact, gold coins saw a 65% jump as well. What did not do too well for them are a couple of things. One, buyer growth was in low double digits or high single digits. That's actually not doing well for them. Even the, diamonds or studded jewelry has grown in low double digits itself, which again is lower than what the company's gold business has been, implying that the margins this time may get compressed. The third thing is CaratLane, which grew at 22%, is a positive. But remember, in the past, CaratLane has been growing at a CAGR of over 35-40% as well. So that has actually seen a bit of slow growth. Emerging businesses, which include the likes of fragrances and ethnic wear, fragrances grew by 26%. Ethnic wear, which Titan's next big foray was in Tanera saris, has actually seen a decline of 4% in their revenues. So those are a couple of factors we need to keep in mind. We've had the brokerages right as well, Macquarie has a 4,000 rupee target price on the stock. They expect 20% standalone EBITDA growth for the company. Now, this is important because if the revenue growth is 25% and the EBITDA growth is 20%, it implies margin compression as well. So let's see where it goes from here on. But from lower levels, the stock has seen a bounce on the back of news that revenue growth has been healthy at 25%. And this quarter has some triggers in the form of, lower gold prices from the highs. And secondly, Akshaya Tritiya towards the end of this month too.
Indeed, and it's showing up in the stock as well. Of course, you can also attribute that to the move in the markets as well. So 4% higher on Titan after its business update. Moving on then, we're gathering from our sources that oil companies are set to mop up around 9,000 crore rupees in FY26 on the back of the LPG cylinder price increase. But to explain, all of that has gone down since last evening and there are plenty of developments there. Sudarshan is joining in to tell us just that. Sudarshan.
So stocks of oil marketing companies have been extremely volatile, opened with gains of 2 to 3%, then had turned flat. Now again, all these three stocks are higher in the range of 2 to 3%. Now, what led to these gains? So first, yesterday government made three announcements. First, it increased special additional excise duty on fuel, that is petrol and diesel, by rupees 2 per litre. Second, LPG price was increased by rupees 50 per cylinder. And third, also announced that it will make compensation for LPG dues. Now, the first question, why was excise duty increased? So excise duty was increased by rupees 2 per litre to compensate LPG dues for FY25. Now, total LPG under recoveries for FY25 as per Oil Minister was rupees 41,338 crore. Now, as per the calculation, total that government is going to mop up by the hike of excise duty of rupees 2 per litre comes in the range of 30 to 32,000 crore. Now, what sources suggest that government will soon move to cabinet seeking the approval for the compensation of 30 to 32,000 crore that can be paid to oil marketing companies for LPG compensation. Now comes to increase in LPG price, which was increased by rupees 50 per cylinder. So what was the reason of increase? Now that increase is going to be basically government will use that increase to make the payment for ongoing dues. So currently all the oil marketing companies make losses of around rupees 220 to rupees 250 per cylinder. That's the loss. Now after the increase, that loss should come down to rupees 200 per cylinder. So basically now the biggest question comes that now after the excise duty hike, will the fuel price at the pump that we buy, will the price increase? The answer is no. Why? Because all the oil marketing companies will bear the loss. So basically they have increased the excise duty that will be borne by oil marketing companies. They are taking money from oil marketing companies and again pay it back by as LPG compensation. Now there is a catch here also. Normally LPG compensation that government used to announce used to go into special fund, but in this case it will go into exchequer money. Basically oil ministry will have to go back to finance ministry asking for that money. What do brokerages feel? HSBC believes that it basically increases the risk perception, but it maintains buy call on all the oil marketing companies. CLSA says oil minister's comments raises the chances of a cut in retail price. Why CLSA is saying this? If you remember, yesterday oil minister has said that if crude remains in the range of $60 to 65 per barrel, or even if it increases to $68 per barrel, there will be a headroom for oil marketing companies to cut the retail price. So going forward, the one thing that will be in focus is the cut in the retail price, because these oil marketing companies are making a healthy marketing margin if crude remains in the current range of $60 to around $70 per barrel. But currently all these oil marketing companies are carrying the inventory of 45 days, and if you calculate on 45-day inventory, the crude level is $75 per barrel.
Right, Sudarshan, thanks a lot for that. The next stock on our radar is M&M. After India has announced its plans to restrict market access to BYD, Commerce Minister Piyush Goyal yesterday cleared the air over BYD's plans to enter the Indian market. Let's listen in.
Well, we need to be convinced that they will work by the rules of the game, and several unfair practices which are gradually coming to light as more and more companies come to us with what's happening, the kind of dumping that's happening in steel, for example. I mean, as these practices come to light, we have to be cautious, in whom we allow to invest in the country. We have to be cautious about our strategic interests, our security interests. So it's a mix of many issues before we are able to take that decision.
All right, articulated comment coming in from the minister out there with regards to the entry, the potential entry of people or companies in this EV space. Sudarshan joins in to explain what exactly does this mean for M&M. Sudarshan, when the news had come by that day, the stock was underperforming. So should this mean by virtue of that relief?
That's so correct. So if you remember last month, there was a news report that BYD is going to set up a manufacturing facility in Hyderabad. And on the basis of that report, we had seen a sharp fall in M&M stock, and that day stock had slumped almost like 6%. Now, this comment from Commerce Minister coming that there is a complete no for BYD's entry in the Indian market. So basically, the reason BYD is not going to set up a manufacturing facility, why this is positive for M&M. So normally, currently, India charges almost 100% tax on built-in cars. So basically, if you build any car outside and want to sell in India, there would be 100% tax. But if you manufacture here and sell, first, tax rate comes down drastically, and second, the price range would come in the range of that M&M has launched its electric vehicles. So now with saying no to BYD, it's going to be positive for M&M because it has launched two major electric vehicles, which is in the range of almost that BYD sells its products.
Markets now, Sudarshan, thanks a lot for that, by the way. The markets have surged to the highest point of the day now, 370 points higher on the index. 22,532 is where the index stands, a sharp recovery from the lows of the day. But the market is volatile. Sudarshan is versatile, from OMCs to autos. Now we move to another auto company, and that's Ola Electric. That's under government scrutiny after a mismatch emerged between its reported February 2025 sales. And who else but Sudarshan to tell us more on that? Sudarshan.
So if you remember the February sales of Ola Electric, basically I would say the February retail numbers, Ola Electric had announced that it had sold around 25,000 vehicles or more than 25,000 vehicles, while Vahan website was showing that it had registered around 8,000 vehicles. Now there was a confusion on this number, and that's the reason basically it had got a letter from Road Ministry, also Heavy Industries Ministry, and even some of the RTOs of Maharashtra, Madhya Pradesh and everywhere else. Now CNBC-TV18 has access to the correspondence between Ola Electric and Road Ministry. So now what does it say? So February, Ola Electric tells Road Ministry that February sales statement of 25,000 vehicles were based on the confirmed orders that company had received for 25,207. And it also tells that it included around 12,000 bookings for S1 third generation scooter and roadster bikes, and deliveries for S1 third generation scooter began on March 16, while roadster bikes are yet to be commercially launched. It even adds that it manufactured 15,533 units in February, of which more than 3,700 were Ola third generation scooter. So basically, confusion has been going on the February sales of Ola Electric for the last few months, and we'll have to see what exactly comes out from this correspondence between Road Ministry and Ola Electric. But currently, in today's state, Ola Electric is currently down almost 1%.
Take that point, Sudarshan. Thanks a lot for that. With that, we'll take a short break. We give you a break as well. On the other side, we get you more on the stocks and markets. We are seeing some bit of a revival in the market. The Nifty up above the 22,500 mark, closing in on the higher end of today's trading range so far. And it's been led by, a smart recovery in the IT pack. So pull up the Nifty IT, which has moved to the high point of trade. And alongside that, we have, a Reliance as well. That is the biggest weight. That too has moved to the higher end of today's trading range. So the IT pack, which was underperforming for the last few trading sessions, has bounced back, and as has Reliance, which has moved to the highest end of today's trading range. And that meant that the Nifty has crossed past that 22,500 mark. Let's see where it goes from here. More after this short break.
Welcome back, and Bharat Electronics is the next stock on our radar. It missed its FY25 order inflow guidance. The stock fell after that, but now on the order win front, it's bouncing back with a vengeance, and another order win was received by the company yesterday. Upasna is here to tell us more on that. Upasna.
Certainly, Hormaz, as rightly pointed out by you. Now, BEL remains in focus today, as well as the order momentum of the company continues to remain strong. Now, company has bagged one more new order worth 2,210 crores from electronic warfare suits for Mi-17 helicopters from Indian Air Force. Now, this is the second order received from Indian Air Force in this month. And mind you, company had received order earlier worth 593 crore on 2nd of April. Now, this current order forms a part of 5,000 crore pipeline that the company had indicated last time, where negotiations have concluded, and now the pending order finalizations is going on. Now, on the back of this, Phillip Capital says that the company has kicked off FY26 on a strong note, securing orders over 2,800 crores till now in just first week of April. It believes that the valuation of the company currently also stands attractive at 27 times FY27 EPS, and it maintains a buy rating on the stock with a target price of 390 per share. Hence, BEL continues to remain in focus as it bags slew of orders even in FY26 as well.
All right, Upasna, thanks a lot for that. With that, we slip into a short break, get back onto the market technicals itself. Sachidanand, the taker of Trade Bulls, will join us with some trading strategies in a day which is seeing some rebound, and the rebound is accelerating as we speak. Let's get in a perspective on the FNO setup this afternoon. We have the Nifty, which has crossed past that 22,500 mark. It's a recovery after a fall that we saw yesterday. Nifty holding up above those levels. In fact, from yesterday's low, now the recovery on the frontline index is almost 800 points. So that tells you the kind of recovery that we've seen. More so on the mid-cap end of things. The index is up around 2%. And the flat line, which the crisscross lines have neither crissed nor crossed, after a bit of a wobble sometime in the middle of the day, are now back at parallel tracks. We have 2,100 plus stocks which are in the green for sub 400 stocks which are in the red, and that's how the case has been throughout the day. The other thing that has really stood out is after the big spike that we saw in India's volatility index, along with the global volatility index as well, we've seen the India VIX come down by about 9%, telling you that there is some put writing which is taking place. That's a positive. The Nifty Bank is above the 100-day moving average, so that's a level that it's crossed. Now, upwards of 51,000 will be the 200-day moving average. So the question is, where does it go from here on itself? The Nifty has its important moving averages at around 23,000, but that's a fair way from here. Before that, we have some triggers for tomorrow. The overnight global cues, anything may come overnight, because that's what the last few days have told us. There is the RBI monetary policy outcome. We'll tell you what the street is expecting. Does the rate cut happen? Does the governor change its stance to accommodative or not is the big question. And the Nifty weekly options expiry plays out tomorrow, because day after tomorrow is a holiday on account of Mahavir Jayanti. Where does the market go from here? Yesterday, remember, on the way down, the 22,500 put writers were caught unawares. So today, does that happen with the 22,500 call writers? For that to happen, the Nifty has to hold above 22,650 thereabouts for these guys to cover their positions. But as the market moved higher, put writers are fairly active. 22,400 put writers are active, telling you that maybe closer to 22,200 would be an important support that comes by. But were the market to break up and break above current levels and see that short covering, people are positioned for that as well. 22,800 call buyers are fairly active, buying something for 41 rupees a pop. Typically, an option which is expiring tomorrow with that kind of a distance would not trade at 41 rupees. But remember, over the last few trading sessions, the VIX has moved higher, so the option premiums have also increased. A lot of short positions added on delivery after yesterday's up move, which was led by short covering and the acquisition news. The street is coming to terms with the fact that the business is loss making. So how does the company turn that around? And some longs added on financials. We have PNB Housing Finance, which has seen some long positions being added, along with SBI cards as well. So we'll watch out for these.
PNB Housing after that upgrade from Goldman Sachs, and of course delivery slipping further away from its IPO price. The top loser on the Nifty 500 now, 487 rupee IPO price. The stock now at 250. Sachitanand Uttekar of Trade Bulls joins in for a quick chart check and of course with his trading ideas as well. Sachitanand, good afternoon. Thank you for joining in. There was a bit of a dip that got swiftly bought into, but does the texture of the market remain a buy on dips after the kind of fall we witnessed yesterday, or would you want to see further upside for a confirmation of that trend? Part one, and of course your stock recommendations for the afternoon as well.
Good afternoon, Harmos. Good afternoon, Mangalam. I think the confirmation was already set in yesterday's session. The way Nifty, confidently closed above that 22,000 mark. It still keeps that hope, clear that there could be a double bottom in place. If you look at today's data, the way Nifty has commenced the day, we saw an initial dip. That dip is also bought in, and the writing at around 22,300 looks like a very stable base. We are expecting that gradually, we may see the Nifty scaling towards 22,800. And that's why we are maintaining a long bias here. If you look at the contribution from Nifty IT, I think that will be very significant. In fact, last week during this show, we highlighted the fact that there could be a sharp decline towards 32,500, where its 50-month exponential moving average support is placed. That particular level has been met, and I think if you look at the way Nifty IT is also recoping, I think a lot of contribution will be there from the IT stocks. So we are expecting that the market texture remains buy on decline, and we may see the Nifty scaling higher towards 22,800 comfortably in a day or so.
All right, 22,800 comfortably in a day or so. That's where we've seen some call buying as well. Sachi, individual stocks, the IT pack is bouncing back. We're seeing some strength in pharma. Bharti Airtel has been resilient as ever, currently at the high point of trade. And Reliance has also picked up. Would any of these interest you from a chart standpoint, or your picks are totally different from these?
Mangalam, I think we have covered a lot of these ideas, but I think the fresh momentum is displayed by IT stocks, and I think HCL Tech has been on our radar. If you look at the overall structure, the structure was a strong low top, low bottom sequence. But if you look at yesterday's price performance, the stock respected its 200 weekly exponential moving average support at around 1,300 very well, and the recovery has eventually led to a bullish hammer formation, which is again a very strong sign of a bottom in place. If you look at the options data, 1,400 call writers were very dominant yesterday. I think they have been pushed back, and that's why we are expecting that there could be a very strong short squeeze in this particular counter. If you look at the data, it is supporting the fact that there could be a rally towards 1470. Eventually, we are expecting the stock to rise towards 1540 in a couple of weeks' time. So that's why we are recommending building long positions here when it comes to HCL Tech. The stop loss can be placed at around 1370 on a closing basis. The first target would be around 1470. Second target would be 1540. The recommendation is given to our clients. This will be our disclosure. Even Bajaj Finance, I think most of the financial stocks are outperforming. And if you look at the performance of Bajaj Finance on the 60-minute charts, there's a clear-cut breakout from a falling wedge formation. We are expecting that the stock may again, try to attempt its fresh 52-week high, and that's why the reward to risk opportunity is also better. So one can place aggressive long positions here, keeping a stop loss at 8,700 on a closing basis. We may see a swift move towards 90-40 during within a week's time. So even Bajaj Finance would be one particular counter wherein the trend has been very clear.
All right, Sachitanand, thank you so much for sparing time joining us today with your views on the index and on specific stocks as well. By the way, the Nifty is now up 400 points. 22,570 is where the index stands at the highest point of the day, and part of that move could also be attributed to the Dow futures. A few minutes ago were up 550 points. They are now up 720 points. So good going for the Dow futures as well. Some spill off onto our own markets. We take a short break, but before we do that, let us also listen in to Robert Subaraman, the head of global macro research at Nomura, on this entire scenario playing out in the US. Take a short break. Back with the opening of the European markets.
baseline is very near a recession now. And it's clearly a risk, a big risk to our baseline view. By the end of the year, you could have core PC inflation above 4%. So more than double the Fed's inflation target.
Welcome back. Let us now cut across to the Rising Bharat Summit, where Shireen Bhan is in conversation with industry leaders to decode what's driving India's next big growth wave.
Offered an olive branch, so to speak. Japan is already in conversation with the US, or at least that's what the US president seems to suggest at this point in time. We've had a call between Marco Rubio and our own Minister Jai Shankar saying that things are on track as far as the India bilateral trade agreement is concerned. The global markets are in a state of panic at this point in time, and we've seen wealth erosion across the US markets, across Asian and European markets, and our own markets as well. So in this very, very volatile mix, how does India position itself? What should our response be? And more importantly, from a domestic point of view, what should we prioritize and focus on? Well, I have three gentlemen who have their ear to the ground and their ear to the clients, who are telling them what is going on at this point in time. Rajiv Memani, let me start by asking you, a Trump era that we live in today, where every tweet changes the way that the markets move, changes the way that policies are being pursued at this point in time. How are you looking at it? When you talk to clients today, when you're talking to your partners sitting in the US and in other parts of the world, what is the view?
Yeah, no, I think very few people really fully are able to grasp the situation now. I think everyone's living on a pretty much day-to-day basis. But, if you just step back, I think what's clear to everyone is this position of high fiscal deficit, high trade deficit, high debt, and that debt being owned significantly by the country with which you have the largest trade deficit was not something that was sustainable, and I think President Trump called it out quite aggressively and has been calling it out. In fact, there was an article that was written by Warren Buffett in 2003, which actually captured this very well. So this has been going on for a while, but I think he's the person.
And he's literally the only one who's kept his shirt on, Warren Buffett, while the markets melt.
So but no one really called it out the way President Trump has. So one thing is clear. I mean, if you look at all this, that he's very determined that manufacturing has to return to US. So I think if you have to pull out anything, I don't think anything is going to stop him from that. Whether he has to apply pressure on countries, on companies, create the incentive environment for that, I think that's very, very clear. He's also very focused on targeting countries with whom US has a massive trade surplus or trade deficit, and they have a trade surplus. And where he believes that there are issues of the rules are not equitable on both sides. So he's going, as a matter of priority, I think he's going after those countries. So if you peel this further, what this is creating, Shireen, is it's creating a lot of uncertainty.
Yeah.
People are unwilling to take investment calls, unwilling to take business decisions. Supply chains are likely to change in a significant way. So everyone is now, and because of that, if I talk to our clients, especially in the US, they're already calling out that the EPS will not be what they thought it will be, and they're finding it difficult to project forward. CapEx is probably going to be higher. So that's getting reflected in what the stock markets, especially in the US, are showing. So that's one, I would say, that's coming out very clearly. Second is almost all countries in the world will now look at trying to say, how can I do more? Value chains have to be redefined with countries with whom we have a level of mutual interest.
Right.
It cannot be absolutely one-sided. So the benefit that China got for a period of last 15, 20 years, I think that is difficult to sustain. And I think that means that a lot of supply chains and everything else will be changing. And if you pull this forward and you come back to say what it means for a country like India, and if you add that this uncertainty that AI will create, whether it's in 3 years, 5 years, 10 years from now, when I say uncertainty, much higher productivity, but in terms of jobs, then India has no choice but to look at manufacturing in a very significant way. And if you're looking at manufacturing, if you look at historically countries that have had outlandish growth, sustainably, it's on the basis of exports, whether it's Germany, Korea, China, Japan earlier. That story may not work in that way. So that means your emphasis on domestic value added, has to become much, much more stronger. How do you create more domestic value add? How do you build relationships of mutuality where you have mutual interest with those, I think, so that you can leverage on the export side of it? And how do you create a business environment which is conducive to all these three things? So whether it's in terms of cost curves, whether it's in terms of ease of doing business, whatever it is. So if you want, I can dive into details of all three.
I'll get you to dive into the details in just a second.
But that's what we're heading from.
That is what we're heading for. But Karan, I want to pick up on a couple of the things that Rajiv has laid on the table to set the context for this conversation. First up, the first order impact of the uncertainty created by the tariffs, this chilling effect that Rajiv spoke of, that investors are going into a state of panic at this point in time, and future investments at this point look uncertain, and so people are going to pause and wait to see how this dust settles. Is that what you're hearing from your clients as well?
I think, Shireen, I agree with Rajiv. There's so much of uncertainty that the clients are all looking at alternative scenarios and what might play out. We'll see multiple, this is a dynamic world, given what you talked about, what the first order reaction is, what different countries are going to respond to, what's going to happen with the macro environment with stagflation, and then the implications on what happens to interest rates, etc. So there's a lot of variables that need to be worked out. So scenarios is the right way to think about. And people will look at
it's great news for consultants. Isn't that what you do? Paint out scenarios.
And I think there are opportunities here. I wouldn't say this is all a doom and gloom. I think the opportunity for India, given we're looking at differential tariffs, and if it does play out, and it's great that India has taken Section 4C rather than 4B, and we are negotiating with the US.
Yes.
And if we end up in a good place in those negotiations, this can be a big plus for us. If I also go back to what Prime Minister Modi and Trump talked about, which is the 500 billion export opportunity, I think therein lies potentially a massive opportunity for manufacturing. And Rajiv is exactly right. We need to push up manufacturing to 25% plus because we need that for jobs. And so I think there are sectors where I think India is very strong, very credible. And I think there is a get and a give. The get is in sectors that we're looking for where the US can send us technology. Whether it's defense, whether it's AI, whether you're looking at nuclear energy, I think could be a huge plus for the country. So I think, but having said that, I think there is a few key imperatives we have to make sure we are following through on. The lesson from China, the lesson from Vietnam is we absolutely need to make sure that we have the ease of business and we are attracting more FDI into the country. Our FDI, net FDI is only $10 billion. And we need global champions to come in to help set up that ecosystem. We also need innovation, what Charo talked about in the earlier panel. We need to design in India as we think about Make in India. And it's an absolute must that the private sector must do more on that front. And I think we need a global scale to be competitive. We all know about what in China, the big scale companies and the advantage they have. So we have to be hyper competitive. So I think while there may be an opportunity for India here, and I really hope it does work out given how the negotiations will play out, I think there is an imperative for us to, to also take away for the longer term for us to position ourselves appropriately.
You know, before I get Rahul back into the conversation, let me just get Rajiv and you to comment on what we just heard you say there in terms of the supply chain diversification that is expected. Some of it is already happened post-COVID, but the expectation now, because of the differential that you talked about, Vietnam, China, etc., much higher tariffs in comparison to India. Rajiv, do you believe that that's going to have a beneficial impact on India in the short, near term?
Yeah, I think it should have, but I think it's too early to call out. So if you look at countries that are competing with India, if you look at Mexico, for example, I think the US, Mexico, Canada, the USMCA has much more favorable clauses than what India has. And I think what President Trump has said is an opening gambit. It's not. This is not a closing. And by the time countries take a defining moment to say they want to change, it takes time. It takes time for companies in India to create capacity. So I would say we are very well positioned because India's ability to negotiate is much greater. If I look at trade deficit of Vietnam, US's trade deficit to Vietnam is $125 billion.
Yeah.
If I look at Mexico, it's $180 billion. If I look at China, it's $320 billion. With India, it's somewhere between 40 to 50 billion.
Yeah.
And there are lots of ways by which India can balance that.
Yeah,
Also,
higher oil imports, LNG imports, defense, all of that. Yeah.
And we have done an analysis to say even if the duty rates were to come down, we can't talk about agriculture here, but in most products, if the duty rates were to come down in India, which is his sort of this, India is the tariff king.
Yes.
It is, I think, and if the markets open up and supply chains get redefined, it'll be a far more beneficial thing for India.
So you're saying industry is okay and on board with a tariff cut, a significant tariff reduction by India?
Most parts of the industry are very open. I won't say all, but I'm saying in aggregation, India will be beneficiary of that. Industries also vary to say where surplus capacity gets created. India's biggest concern right now is, yes, there's a lot of talk about India-US, but the bigger concern is the surplus capacity this will create in China, Vietnam, and in some sectors in Europe as well. So I think to that extent, people want to watch out for that closely. But I would say broadly, Shireen, most of Indian industry is quite comfortable. And I think if things go as logically one would, and it's very difficult to say this in the current regime, I think India should be a net beneficiary. And companies are quite bullish.
Yeah, and today, this morning, we saw headlines saying that Apple is going to redirect more of its production to India on account of what we're seeing with tariffs on China. Do you believe that that's a one-off? Because we already have the capacity that's been created here, or to Rajiv's point, that people are going to wait to see how this plays out before taking calls on fresh investments and fresh capacity.
Shireen, Apple is already doing, the electronic sector has been a big plus in the way the government has set up the electronic sector in the last few years. I think is a big story around India, so that will continue. Now, Apple is going to wait and watch and figure out, what's the amount of production they'll do in different geographies. But I think it's very smart what the government has done when it has not only has put in the PLIs, and now we're moving towards the latest announcement of going into components, going into more domestic value add, and then even going into design. You've got firms like L&T that are doing semiconductor design in India, and then you've got the fabs, etc., that the Tatas and the Murugappas are setting up. So I think electronics is a very good story in India, but it's still yet to play out to full potential. If you think about electronic value chain in 2030 will be about 6 trillion. It's about 4.3 trillion today. So it's a massive global value chain that we should be thinking of participating. And that's why us getting in front with the right incentives and being competitive with the scale players, you need the scale players like a Tata, the Murugappas to be playing to build that ecosystem in India.
Yeah. Rahul, let me come to you now in terms of the opportunities that you believe present India at this point in time, the sectors that you believe are poised for growth and have a strength and advantage at this stage.
So I think just to build on the previous points, and then I'll come to your point, I think we have to de-average the situation a bit. And if you see from our vantage point, we are the least dependent on US exports. especially as far as goods and merchandise is concerned.
Yeah, 2%.
2%, and it doesn't move the needle for us in terms of our domestic GDP growth and so on. So I think if we negotiate well, as has been said, right, it can open up a large window of opportunity, especially in sectors where the differential tariffs are there and where we have longer term advantage. So if I was there, I would go out and think of it as a positive opportunity creation, where whether it's electronics or it is textile or it is cables and wires, where we see the competing nations have relatively higher tariffs than us. On the other hand, I think we need to be also aware that the whole world trade will get rewritten, and which means that countries which will not provide or supply material to America will supply elsewhere. And for example, China, which has large capacity of many products, they will find their way into the country. So we have to be resilient. We have to watch that closely and ensure that our industry is protected against that.
So let me put a challenge your way now. If you had a client who asked you to draw up a scenario for India at this point in time, perhaps the Indian government reached out to BCG and asked you to draw up and do some scenario planning, what would be the 3 or 4 things that you would ask the government to prioritize?
I think it's difficult to pinpoint, but I would say first we have to, in the short term, there will be uncertainty. And there is uncertainty. Whenever uncertainty happens, people freeze decisions. Capital investments will go slow, and therefore in the near term, we will face, and not just we, everyone in the world will face some decision paralysis, some capex slowdown, and therefore it is good to incentivize the economic growth, because our economy is strong and resilient. If you look at our drivers of economy, it's more consumption-led. I think we are talking about manufacturing, but manufacturing has stayed at 15 to 16 to 17% of GDP for decades.
For the last, right? Several decades.
And in contrast, Korea, China is 25, 27%. Yes. If we want to grow from 5-6% to 8-9%, we need manufacturing to pick up. But our base growth comes from consumption. And that is there. Our demographic profile, our rising GDP per capita, spending power, all of that poises to all, whether it is financial services, healthcare, anything that our mass consumes will grow, irrespective of all the macro trends.
And I think...
Welcome back. Let's get in a corporate conversation right now. We have an Info Edge update coming in, 4th quarter update. Their billings are up 19%. We'll get in some more details with regards to their, all their verticals, be it the Naukri vertical, be it the real estate vertical, and all the other businesses that the company is doing, including that of matrimony. Currently, 19% higher billings, something that has the street excited. The stock up around 1% from lows itself, though has taken a bit of a drubbing itself. Speaking about, business tech itself, we have Affle, which is an ad tech platform which helps companies with mobile marketing and other stuff as well. They've held the Affle 3i Summit at BSE, which marks their 3rd decade of business. It's fairly well attended by a lot of investors, HDFC Mutual Fund, you have GIC Singapore, Goldman Sachs, JP Morgan, all of them. So let's get chatting with the management about what the near future and what the long-term, medium and long-term aspirations of the company are. Anuj Khanna Soham, who is the CMD and CEO, joins in. Anuj, always a pleasure speaking with you. The last 5 years, your revenue has grown by about 5.5 times. EBITDA has grown by about 4 times as well. You have a medium to long-term vision of growing your revenue by 10 times. If you could tell us if there was anything new that was discussed at this summit, and what are your near-term and long-term targets?
Thank you. Today at Affle 3i, we have invoked the power of our third eye intelligence, and we have also unveiled quite a few initiatives that we will be anchoring our growth on for the next decade. We are targeting 10x growth over this decade, which is basically a math of 25% compounded annual growth rate for our revenues. We expect margin expansion. We expect us to do really well at the back of these AI initiatives. Today we unveiled Optics AI, our creatives platform that can power about 1 billion unique hyper-local, hyper-contextual creatives. We also unveiled CTV AI that has the capacity to serve 1 million SMEs around the world, bring them on board with advertising, to try CTV advertising in a performance advertising format for bite-sized ad campaigns. We also unveiled 100 AI agents today for the first time, and that is AI agents that will enhance the authentic, augmented intelligence of Affles working around the world. We see ourselves attaining 10x growth for the company in this decade ahead, with maybe at max 1,000 Affles augmented by, and the productivity augmented by the AI intelligent agents working with it. So that's the plan that we unveiled today, and yes, you're right, it was very well attended, and we're pretty happy with the kind of response we've got.
Anuj, good afternoon. Thank you for joining in. So, we've laid out these plans for the next decade, but there are some uncertainties that are springing up on the immediate term. And that, of course, is because of the fact that all of the uncertainties that you're seeing in the global markets. Now, 26% of your top line for this year has come from developed markets. What is the reading that you're getting from your clients overseas, particularly in the US as well? What's the reading on the ground that you have right now?
See, two things I'd like to say, when you talk about turbulence, I believe you're talking about tariffs. And advertising is a strictly local business. It is not really anchored. I mean, at least our company, we are registered in the United States. We have an entity there. We have some customers there. It's a very small part of our business, and it's a very small part of the total advertising pie of the US market. So we have a very large addressable market there. We are just scratching the surface of what we can get there. And it is at the moment immune from tariffs at two levels. One, there is no import-export involved in doing advertising services. Secondly, tariffs don't cover digital software services at the moment or IP-related charging. And third, most of our IP is in Singapore or in Dubai entity, and when we work with our US entity, they are on the lowest grades of tariffs. So at the moment, we feel that we are navigating that quite well, and the message we are getting from the market at the moment, the pipeline looks robust and strong. So we'll watch it closely, but I think we are quite resilient and well prepared at the moment with our risk management frameworks.
All right, what about the very near term? You know, FY25, if you could give us a sense of where you've ended in terms of growth, because you did have that target growth overall around 25% with PAT margins of 17 to 18% in the medium term. If you could define that medium term and how this year has been for you, and what's the immediate target for the next year?
Yeah, so for the last financial year, which ended in March, I mean, you know, we'll wait for the earnings call to come up, but we believe that we have exceeded or met any market expectations so far. We are still waiting for the audit results, but, you know, we're pretty much on track. I think the performance has been good. I'm pretty happy with the way FY 2025 has ended for us, and we look forward to covering more details once the audit numbers are out and we can talk at the earnings call the next time. Our outlook for FY26 is also very, very strong. You know, at the moment, we are seeing broad-based growth coming across from all our verticals. A lot of tailwinds in our business. We are seeing a lot of efficiencies coming with AI utilization. Productivity of our workforce is up substantially with the 100 AI agents going live today. So on all these fronts, whether external or internal, at the moment, we remain bullish. Of course, we are concerned about, you know, the turbulence in the overall, you know, markets, and we are not immune from that. But I think fundamentally our business is strong. Our financial fundamentals are strong. Margin position looks intact. Efficiencies of scaling up and scaling up efficiently seems very clear. So I believe we will grow, and we will grow well, and we will also expand our profits more than our revenues in this next coming financial year.
All right, take that point. It was a pleasure speaking with you. Obviously, we'll let you go with the promise that you join us post your fourth quarter numbers and then discuss those you know, quantitative details in a lot more granularity, and we'll obviously press you a little more for FY26 numbers on that as well. Thank you for joining in. With that, we'll take a short break. On the other side, Manisha Gupta joins in with Anindya Banerjee of Kotak Securities on all things commodities.
Welcome back, and joining us on the show now is Anindya Banerjee. He is Senior VP Head of Research Commodities, Currencies and Interest Rates at Kotak Securities. Anindya, hi. Difficult times, clearly, with the way the markets are very, very volatile. But I do want to start with the precious metals first. And we've seen silver prices gain in line with some bit of a risk on with base metal prices, while the gold prices have seen some correction on the lower side. How do you read this divergence within the two precious metals?
A very good afternoon, and thank you for having me, Manisha. Yes, actually, silver has gained compared to gold, and that is because of, one, the base metals, as you pointed out, and second, there is a short covering rally in the equity markets too, because silver is more risk on than gold. So it has that ability to outperform when things are looking better. So yes, since yesterday is morning low, we have seen an outperformance in silver, and it may continue for a while as long as the uptrend in the stock market continues. So we could see actually silver gaining. On charts too, it's looking a little more stronger than gold as well. So it can see levels of $31 over the near term.
And as we've seen in last 12 hours, even as the gold prices have come off, we've seen that safe haven buying money go into dollar, in Japanese yen and Swiss franc. Is this like a short-term phenomenon, or do you see the safe haven money now getting kind of split here?
So, in fact, if you see this whole cycle, initially the money was going towards gold and partly towards silver, because that was a flow which we termed as a de-dollarization flow, which was basically anticipating this fracture in the global trade, which we are now seeing. But as this fracture in the global trade happens, the de-globalization, it is actually quite positive for dollar. It is quite positive for the US treasuries and yen, because these are the traditional safe haven assets which attracts a lot of flows during times of turmoil. So right now we have seen margin calls selling in gold and silver as well. And that's the reason why gold has come down, in spite of the fact that gold should be benefiting from this. But and the dollar index is still relatively weaker, but gold has not been able to catch up it, because we think there's a lot of margin related selling which is happening in gold, especially in the global markets. And yes, so at this time, the dollar, yen and the US treasuries tends to do well. Gold is also looking a little weaker on the chart, so it might just struggle over the near term.
Did you say from de-dollarization to de-globalization, Anindya?
Yes, because if you remember the last time I was on your show and we were talking about base metals, I said in all the bullish outlook, the biggest threat is the intensifying trade war between China and America, which we anticipate will become far more intense in the coming days, because Donald Trump's America First policy is another name for deglobalization, is another name for basically moving the manufacturing from into US. So it will lead to a situation where the trade war between America and China will intensify in the coming days, and we are already seeing the signs of it.
Yes.
So that can be a factor to watch out for.
Anindya, thank you so much for that. Manisha, thank you for taking us through with that conversation. We wrap up on this edition of Halftime Report with the news that the market surged to the day's high, 22,650 on the Nifty, making it 875 points from yesterday's low. IT Pack, Reliance and a bunch of stocks doing well for the frontline index. Take a short break, come back, and Business Lunch takes all the market action ahead.